talking today to Phil Grant, who is a partner at Nexia ASR, a full-service accounting firm, boutique accounting firm. Welcome today, Phil.
Thanks, Fiona. Lovely to be here.
Look, we've spoken a little bit about value, how you can define it and how you can maximise it in the past. But I'd really like to get into that today, because I think value is something every business owner always tries to grapple with. When we talk about value, what are the different ways of looking at it that you use, Phil?
Look, I think there are there are the traditional approaches where you sort of do a full valuation, where you value, maybe the future cash flows of a business, and you go through a rigorous sort of approach of, analysing the numbers and looking at forecasts and tearing them apart and testing them and making sure that they're valid, and then trying to work out what the current value is. And often you look back on the past as a reflection to the future, and you might apply a multiple to that to come up with an end value. Most people will be familiar with that sort of methodology of taking an EBIT number, an earnings before interest and tax, and then applying a multiple to it. And I think that works in most senses in a traditional business which is generating strong or generating cash flows. But I think in the context of what we've been talking about in terms of online businesses, often that's not the case. The businesses don't have cash flows. They have small cash flows or no cash flows. Mm-hmm. And I think the boundary of what value is sort of a bit blurred. And you have to ask your question, well, where is the value in those businesses? And I think what we're seeing is that these new age businesses, which are being created on the web, have changed the valuation methodologies, and people, I think different people are willing to pay different prices for the same businesses, purely because people will assess the value to themselves differently. Mm. So we've spoken before about Twitter as an example of that sort of business.
Recently valued at $1 billion,
that's
taking
right,
in its last round of investment. They have small revenues at the moment.
Small or no revenues.
No revenues.
Yeah.
How do you arrive at that sort of number, do you think?
Look. I think I don't know. How Twitter did arrive at their number, but in many instances, it's what they think they can offer other businesses. Now, clearly, Twitter has got a massive following, and it's just taken over, and so they've got a huge distribution network and connection network, which is going to have to be valuable to somebody who wants to sell in or reach their followers. And ultimately, value is determined by scale. And if you can have this massive scale of people out there in the marketplace, there has to be some value. Now, the $1 billion, how somebody came up with it, I'm not sure. Maybe it was simply just a number that was worked out based on a funding requirement, and they knew that they had to give away a certain percentage of the business in order to raise that money. But clearly the numbers are enormous. I mean, there are other examples of businesses which get sold for silly numbers and they're not really generating much money. Clearly there's value to somebody, and I think it's almost a subjective notion for what that business or what that business can offer another business. And if you've got lots of people, and Fiona, you'll know how many people are out there in Twitter, lots of people who are happy to spend even just a small amount of money, but multiply that by a huge number of potential customers, the revenues can just be enormous. I mean, almost too hard to contemplate. So then you apply even a multiple to those, you've got massive value. And I think that's how you arrive at those propositions. So I think we're seeing people who are utilising the web and its power and the leverage capabilities of it to build things, just not even knowing where it's going to necessarily lead them, but they know it's going to lead them to a massive marketplace, which will ultimately translate, hopefully, to massive amounts of value.
Phil, some of your clients who are more traditional style businesses must be gnashing their teeth when they see some of these investment rounds go through. How do they feel about this new revolution in valuation for these new internet companies?
I don't think they sort of have a particular view on it. I think the reality is that if people are prepared to pay that price, they'll pay the price. And I think you need to have deep pockets in a lot of these businesses to develop So Twitter, has had a couple of raisings where there would have been some money put in initially by the original founders, and you need to be able to be prepared to have deep pockets to fund these businesses, and ultimately somebody has to believe your story. The traditional model is, well, how can you raise money for a business which doesn't have forecasted profitability and revenues? It just almost seems bizarre. But I think the truth is that with the web, you can spend massive amounts of money up front. It may not go anywhere, but you can very quickly turn it around because of the scale of it. And so within a reasonably short space of time, you can make massive amounts of money. So that turnaround between investment and then actually generating a revenue stream down the track, even though we may not know what that is going to be today, which I think is probably the case with someone like Twitter. They don't quite know where their revenue is going to come from, but they know it has to come from somewhere with the number of customers, potential customers they've got on stream. So I think there are going to be certain people who just don't ascribe to this sort of process or this principle of valuation, but I think it's the way of the future. I mean, there's no doubt every business knows that they've got to have a web presence, and how they are able to leverage off that, I think, will ultimately have a big impact on the valuation of their business.
Phil, what one tip would you give to an internet business to help them maximise their value?
I think they need to have some form of at least idea where they think they're going to be heading. I think it's pretty bold for a business to go out there and just build something and not have a notion of, well, where is this going to lead? I think all of these internet businesses have an idea, and they think, oh, this is where I think the revenue is going to come from. It might change, but I think you've got to have an idea that, okay, these are the potential opportunities. Because ultimately, you can't just go on and just raise money and just hope that a Microsoft or a whoever is going to come along with a big checkbook and say, bang, we think this is a great application for our business, and we're going to grab you. That's a fairly, risky position to take, and I think you're going to have some thought, and I think it's like any business. I don't think it's any different. It just means that you may have to spend a lot of money in order to build that scale and to get some penetration into the marketplace. But I think as time goes on, we're getting a bit more sophisticated, and I think we understand the way the web works. If I again go back to when your business, Arts Hub, started, none of that was around. No. Nobody knew how does this all work, and how does this connection work? But now it's second nature. People get it. So I think now that that's the way of the world, I think it's now just building things around and using that whole structure. So I think you need to I think the same business fundamentals are there. But
have a goal.
I think you need
have a plan.
I think you need to, but I think maybe you need to have two or three.
Yeah.
I think you need to think, well, maybe we'll go this way, maybe there's this way, maybe there's this way. I think to simply say, well, advertising is the way we're going to earn revenue, is maybe a bit short-sighted. I think yes, at the moment that works, but I don't know whether that's going to work in the future. So I think there's going to be other opportunities, and I think by virtue of scale again, we can get huge amounts of end revenue just purely on volume, and because the web offers us such a huge opportunity to connect up with all of the Twitter people as an example, and that gives you your marketplace, and apply a low dollar value transaction to high volume, and you've got massive amounts of revenue.
Thank you for your time today, Phil.
Pleasure. Thank you.